Welcome to the world of dividend investing, where the opportunity for passive income and wealth building awaits. Imagine a stream of cash flowing directly into your bank account without you lifting a finger. That's the beauty of dividend investing. So whether you're a seasoned investor or just starting out, join us as we explore the world of dividend investing and learn how to turn your money into a powerful income-generating machine. What is a dividend? Dividends, the sweet nectar of the investing world. These payments are like little presents from the companies you've invested in, a way for them to say thank you for your support. But what exactly is a dividend and how does it work? A dividend is a portion of a company's profits that is paid out to shareholders on a regular basis. Think of it as a slice of the pie, a share of the wealth that a company has generated. These payments can be made in cash or in the form of additional share. Companies have the discretion to decide whether or not to pay dividends and, if so, how much to pay. Some companies pay dividends quarterly, while others pay special or annual dividends. It's important to note that not all companies pay dividends. So if you're looking to invest in dividend-paying stocks, you'll need to do your research. Dividends are generally paid out of a company's earnings, but they can also be paid out of reserves or capital. In any case, dividends are a way for shareholders to share in a company's profits, providing a way to earn passive income and potentially grow their wealth. How dividend investing works. So you're interested in diving into the world of dividend investing. But where do you start? Well, first things first, you'll need to open a brokerage account. This will give you access to the stock market and the ability to buy and sell stocks. Once you have your account set up, it's time to start researching potential dividend-paying stocks. This is where the fun begins. Think of it as a treasure hunt. You're searching for companies that have a history of paying and increasing dividends. When researching stocks, it's important to look at the dividend yield, which is the annual dividend payment divided by the stock's price. The higher the yield, the more income you'll receive for each share you own. But don't just focus on yield. Also consider the company's financial stability and growth potential. Once you've found a stock that you believe in, it's time to make your move and purchase shares. And just like that, you're now a dividend investor. But the journey doesn't end there. As a dividend investor, you'll need to keep an eye on the companies you've invested in and monitor their dividend payments and potential changes. It's also a good idea to diversify your portfolio by investing in multiple companies in case one company decides to reduce or stop paying dividends. By following these steps, you'll be well on your way to earning passive income and potentially growing your wealth through dividend investing. Advantages and risks of dividend investing. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. Dividend investing can be a powerful tool to earn passive income and grow your wealth. But like any investment, it comes with its advantages and risks. Let's start with the advantages. Dividend investing can provide a steady stream of income, especially if you reinvest the dividends so your money can grow over time. Additionally, companies that pay dividends are usually financially stable and have a history of profitability, which can provide some downside protection for the value of your stock. Another advantage of dividend investing is the potential for capital appreciation. As the company grows and becomes more valuable, the stock price tends to rise, and you can sell the stock at a higher price than you bought it for. Now, let's talk about the risks. Dividend investing is not without its risks. The stock price can fluctuate, and if the company's financial performance deteriorates, the dividends can be reduced or even cut altogether. Additionally, the dividends may be subject to taxes, which can reduce your overall return. It's essential to do your research and keep an eye on the companies you've invested in to minimize the risks and maximize the advantages of dividend investing. Remember, no investment is without risk, but the potential rewards can be significant. Reinvesting dividends. Reinvesting dividends is like planting a money tree. Each time you receive a dividend payment, you're given the opportunity to plant a seed, which can grow and flourish over time. Reinvesting dividends allows you to purchase additional shares of a stock using the dividends received, which in turn increases the number of shares you own and can lead to a higher return on your investment. Think of it this way. When you reinvest dividends, you're adding fuel to the fire, giving your investment the potential to grow at an accelerated rate. As more shares are purchased, you'll receive more dividends, which can be used to purchase even more shares, creating a snowball effect that can compound your returns over time. It's important to note that reinvesting dividends doesn't come without its drawbacks. For example, you'll need to pay taxes on the dividends, which can eat into your returns. And if the stock price falls, you'll be buying shares at a higher price, which can decrease your return. In the end, whether or not to reinvest dividends is a personal choice and depends on your investment goals, time horizon, and risk tolerance. It's always a good idea to consult with a financial advisor before making any investment decisions. Dividend growth investing. Dividend growth investing is like a treasure hunt for companies that have a history of paying and increasing dividends. These companies are like diamonds in the rough. They may not have the highest yield, but they have the potential to provide a steady stream of income that can grow over time. When looking for dividend growth stocks, it's important to focus on companies that have a history of increasing dividends year after year. These companies are more likely to continue to pay and increase dividends in the future, providing a reliable source of passive income. It's also important to look at a company's financials to ensure that the dividend payments are sustainable and that the company has a strong business model that can support future growth. Dividend growth investing can be a powerful tool for building wealth over the long term, as the steady increase in dividends can provide a higher return on investment than a stock that pays a high yield but doesn't have a history of increasing dividend. But as with any investment, it's important to do your research and keep an eye on the companies you've invested in. Dividend growth investing is a marathon, not a sprint, and requires patience and a long-term perspective to be successful. Tax implications of dividend investing. First, it's important to understand that dividends are taxed differently than capital gains. In most cases, dividends are taxed as ordinary income, which can have a higher tax rate than capital gains. However, for qualified dividends, a lower tax rate may apply. One way to minimize the tax impact of dividends is to hold your dividend, paying stocks in a tax-advantaged account such as an IRA or 401k. This way, the dividends will be taxed at a lower rate or not at all, depending on the account type. Another way to minimize the tax impact is to time the sale of your dividend, paying stocks. By selling the stocks after holding them for more than a year, you'll be taxed at the lower long-term capital gains rate, which can be lower than the rate for qualified dividend. It's also important to keep track of any changes in tax laws that may affect the treatment of dividends, so you can adjust your investment strategy accordingly. In the end, taxes are a part of life and investing, but by being aware of the tax implications and taking steps to minimize the impact, you can keep more of your returns and continue to build wealth through dividend investing. And there you have it, a journey through the world of dividend investing, a land of opportunity for passive income and wealth building. We've explored the basics of dividends, how to research and select dividend-paying stocks, the advantages and risks of dividend investing, and the tax implications of dividend investing. But this is just the beginning. There's so much more to discover in the world of dividend investing. It's a journey that requires patience, research, and a long-term perspective. But with the right mindset and approach, the rewards can be substantial. Remember, dividend investing is not a get-rich-quick scheme. It's a marathon, not a sprint. But with each dividend payment, you're given the opportunity to plant a seed, to invest in a company that can provide a steady stream of income that can grow over time.